On YouTube, my name is Ty with the Dividend Stock King with another video. Excuse me. Take time about my kids' account, the custodial account. Before I begin, I'm not getting financial advice. This is all for fun. But we're talking about my kids' custodial account, and I advised a lot of people start your kids on a custodial account. Start investing for your kids earlier because they have way more time than we have. So, in my son's account, I think about changing the strategy a little bit because I'm thinking about going more of an index-based option plays, or versus going more single stock because they own Alti. This is my son's Aiden. They have I'm going more like a YMAX type of ordeal, a QDTE, a QYLD, because they have Coney, he has Misty, and he has Tesla, he has other single stocks. He has he has Netflix and AMZ and a little bit of everything they have. So I'm looking towards going towards more of an index-based ETF that pays like a blocks, like a QQY, IWMY, WDTE, QDTE, RDTE, Yilmax QDTY. I'm leaning towards that to limit the risk in the portfolio. Now, they don't need a lot of yield. My son's yield is at, so it loads up at a 42%. I think that could be a little bit lower. But now, so they don't need a lot of yield because they're already getting that compounding effect, So I'm looking towards more like a Main Street Capital. I'm going towards more like a VU, going to QQQ. Now they're getting income, and that will always pay. And I set it up to get paid every day. They own Block for Monday. They own a few Granite shares for Tuesday. They own YPay for Wednesday and some process for Wednesday. They own Alti and they own YMAX and they got MST and they have all the single stock pairs for YMAX for Friday plus QTDE. So they get paid every day of the week. Every day they go up and get a dividend. Now I'm trying to focus on more of a steady payer, low dividend yield. I can go as far as like a QQY comes to mind because the last month has been very stable at $25. More of a now I do like that QLDY that one that pays twice a week. I like stuff like that for a kid because it's on an index. It's on a whole index, so it limits some of the risk. It's on a whole index, and number one, and hit a QLDY from the fines on NASDAQ. So I'm looking like stuff like that is, to me personally, is less riskier than, it's still risk, but less risk in a single stock ETF because something like Tesla will go down, your ETF will go down, but some on the index, it's a little bit less risk because it's more of a basket of stocks. So I'm looking at that as well as a possibility for them to invest in something more index-based, S&P or a NASDAQ type of ETF that does cover calls on the whole index. I look towards that for my kids because, you look at it, they own the single stock payers, they own Tesla, like NVIDIA. Aiden has a full share, but it's going to pay every week for 20 or 30 years. I'm going to switch them to more of I have blocks. Blocks is a crypto play, but I'm looking towards more of that as well. Look at my son Avery's account, his portfolio. He has Yalty, he has Main Street Capital, Tuesday Main Street Capital. He's 2 years old, by the way. 2 years old. QTDE, like go more of a YMAX, QDTE type of style investing based on an index. I'm looking towards that right now for my kids. And he has Tesla. He has Tesla. He has 10 shares. He has Tesla. He has Misty, 4 shares. Put Misty in the dividend calculator for 20 years and see what you come up with. PTLW, they have Coney. They have block. So they have high yielders, NVIDIA. They have high yielders, but I'm looking for more QDE. So that's perfect for them because it's more of an index. And that is it. That's it for this video. Let's go on more index based for the kiddos. And I might even go to a VU and a QQQ. I want to have both a mixed bag, like 80% income, 20% growth. Sounds cool with me. But yeah, that's the video. So I'm going towards that for the kiddos, see what's going on. And of course, I set them up to get a dividend every day. So again, the snowball effect on a 80% yield is insane. So I'm going more index. My next purchase will be for the kids. Will probably be a QDYL, the new one for the flying pay twice a week. I might go to QDTE, RDTE, and maybe I go into XDTE as well for that stable 30% yield. Stable. I might go into that in the future because again, in closing this video, your goal for your kids' accounts and for a Roth IRA is to compound. Is to compound your shares over time. Your kids are young. If you start at 1 year old, your kids are young. And in some states, age 18, go 18 years old, they have 17 years of compounding growth, of compounding. And if you teach your children to invest, to not sell your dividend, but use some of the yield, but also reinvest some shares and to get more shares should be a great thing. Everyone should be doing for the children. So my name is Ty for the Dividend Stock King. Thank you for watching. Keep this in mind that, investing for your children is not hard. You could do just $10 every 2 weeks, right? You could do as little as $10 every 2 weeks for your children, right? Like today, for a prime example, I put $10 in both kids' my accounts. And I put $5 in QLDY, and I put $5 in, I think it was QDT. Simple, it pays every week. And then with the kids' account, you don't know how to put as much money into it because the share count don't really matter. What matters is the compounding effect of getting a dividend every day or get dividend once a week and gets reinvestment. It's just two parts to the system. It's the getting the dividend part, number one, and number two, reinvesting it. But you must get started. The sooner you start, the better. And one last thing before I close, one of the biggest regrets of a dividend investor or investing in general in stock market, real estate, one of the biggest things people say is, I wish I would have started sooner. And I'm the same boat. I wish I would have started investing in the stock market much sooner. I'm talking about when I first 18 years old, putting that first $5, $10 to work. That's one of my biggest regrets of not starting sooner, because I could have threw in a little bit of money, $5, $10. And back then, I could have they got monthly dividend stock payers back then, but I could have just bought monthly dividend payer stocks, but I didn't. So I didn't start till I was, damn near 30 years old. So, start now. You don't have to put $50 in. You could buy, $5, $10 into an ETF. It don't always have to be, you got to buy a full share. You can buy fractional shares. Today's time, you can put $5 into an ETF that pays every week. You can put QTDE, QDTE, go up here. QDTE is how much this thing cost. My phone will work because it doesn't want to work. There we go. It is $34. You don't have to put the whole $34 to get a full share. You can put $5 in. You can put $5 in. Put $5 in. That's it. And they'll get 1 or 2 cents a week. But it compounds. It started. The snowball has started. It has begun. And they'll get dividends for the next. And then if they're smart, if you teach your children, they can hold ETF for the rest of their life. Think about that. Think about it. They can hold this ETF for the rest of their life. When they hit 30 years old, they still have the ETF that pays them every Friday since they was 2 years old, and it's still paying to that day. And guess what? They could pass it on to their children, so their kids will have a boatload of shares because you bought it when they were 2 years old. Now your grandkids will have their shares. So again, just think about this. They'll get paid a dividend every week for the rest for their life. I'm saying it right now, and if these funds hold up, my sons will get paid every day, 5 days a week for the rest of their life. Just think about that for them. They'll get paid for the rest of their life. They'll have income every day. Every day they wake up, they will get a dividend. They will get income every single day. I'm going to leave with that. Thanks for watching.